The question that we have today is, does market timing ever work? And if so, how do you actually time the market? This is a question that every single investor comes to at some stage or another. At this point, you've probably been learning about investments, the importance of investing, and now you have the question of, okay, now that I have some money I'm ready to invest, how should I go about investing? Should I just put all my money down? Should I wait? Because right now it seems like an all-time high. Maybe I should wait till the market dips and then put my money in. I've heard this thing about dollar cost averaging. We're going to talk today about, does market timing ever work, and how do you appropriately time the market so that you can maximize your returns? So let's get into it. Hey, what's up everybody? My name is Sean. I am a life and finance coach, helping you create financial freedom and living life on your terms. So if you are into those types of things, make sure you check out some of my other videos where I discuss everything related to finance, entrepreneurship, building wealth, and living life on your terms. Now, if you haven't done so already, please be sure to subscribe to my channel. Also, smash that like button for me if you can. It would mean the absolute world to me. But let's go ahead and start talking about market timing and how to begin approaching this scenario. So this is a question I've been getting a lot of lately through some of my clients and my subscribers and my followers is this the right time to buy? Because let's face it, all the markets are at an all-time high right now. I mean, when you look at the stock markets, things are selling at a crazy price, and also in real estate. And so the age-old question, or the common question right now is, should I wait? Are we in a market bubble? Are we at all-time highs? Do you think maybe we're going to go down? And so should I just wait until the market goes down a little bit, recorrects, and then invest my money? How do I maximize my return? So I was going to do my own study and start calculating all this stuff, but luckily on Reddit I found someone who did this exact same thing that I was getting ready to do. So I'm going to go ahead and give this person the credit. The link is in the description box below. We're going to follow his example. I'm going to explain it, and I think after this we're going to have a very, very good idea of how market timing works, how to go about timing the market. But make sure you stay to the end, because after we discuss this, I'm actually going to talk about how much money you should have invested so that you can live off your investment portfolio. In addition to that, how much you should be investing. So let's go ahead and do a deep dive into this specific case study. Now, there are 3 different girls in this case study. There's Tiffany Top, there's Brittany Bottom, and then there's Sarah Steady. Now, these girls are very similar in that they all have a buy and hold strategy. And they all start with $99,000. They all reinvest their dividends. They never sell their stock. And because they are such smart financial girls, instead of having their money when they're not investing in just a low interest, 0.01% interest bank account, they have the money that they're not investing currently sitting into a very high yield, 3% per year savings accounts. Now keep in mind, this investment strategy goes on for 41 years and it spans the 5 major market crashes. The 1987 market crash, the one in 1990, the 2002 market crash, the 2009 market crash, and of course the one that just happened this last year in 2020. Now, while these girls all have a buy and hold strategy and they're very similar in a lot of ways, they are different in the way in which they time the market and the way in which they invest. So we're going to discuss the differences between these 3 girls and whose strategy yields the greatest return over the course of 41 years. So let's dive into this. Okay, so let's start with Tiffany Top. Tiffany Top, as the name suggests, is a market timer. She believes that the best way to maximize your returns is to be the most perfect market timer. And so she starts saving in 1979 and saves for the next 8 years. And finally, after 8 years and saving up a bunch of money, she musters up the courage to finally time the market. And as soon as she does, the market just crashes. And she ends up losing 33% of her investments. And eventually she goes to the point where she musters up the courage to do it again. As soon as she makes her investment in 1990, the market automatically crashes, losing 19.7%. And she continues to do this through every single market crash. She invests at the exact peak of the bubble. And she does it again. In 2002, she loses 49%. In 2009, she loses 56.5%. And in 2020, she loses 34.1%. Tiffany's had the absolute worst luck when it comes to investing. She's always timed at the very, very peak of the market. As soon as she does, the market always tanks. What does she end up with over the next 41 years? She still ends up with $773,358. So that's actually not too bad considering the fact that she's literally picked the absolute worst times in the history to invest. So let's talk about our next candidate, which is Brittany Bottom. Now, Brittany Bottom, as her name suggests, is also a market timer. But unlike her unfortunate friend Tiffany, who always picks the worst times to buy, Brittany actually is somewhat of a financial genius. And Brittany Bottom somehow manages to defy all odds, and she invests 5 times at the exact market bottom. And with her being such an evil genius, over the next 41 years of perfectly timing the market and being successful, she ends up with just a little over $1.1 million. Definitely more than her friend Tiffany. And so obviously, even though Brittany made more money, it wasn't that substantial of a difference. In fact, she only had about 45% more than her friend who picked the absolute worst times in the history to be investing. Now, the third candidate on our list is Sarah Steady. Now, Sarah Steady is also a buy and hold investor, but the difference with Sarah is that she doesn't want to time the market. She doesn't have the time. She doesn't want to put in that kind of effort. She wants to make her life as simple and easy as possible. She decides that she's just going to pick an S&P 500 index fund, and she's just going to auto invest. And she's decided that she's going to invest $200 every single month starting from 1979 up for the next 41 years. And this is going to span during the good times and the bad times. So she doesn't ever change her strategy based on how the market's shifting. So the question becomes, who do you think profited the most with their strategy? Well, if you guessed Sarah Steady, then you are absolutely correct. You see, Sarah Steady investing $200 a month, every month, just making it automatic, she ends up with just over $1.6 million over the course of 41 years. Now, keep in mind, this is $500,000 more than Brittany Bottom, who perfectly times the market 5 times, defying pretty much every odds. Now I want to go ahead and throw a fourth candidate in here, which was not in this particular study, but this is Play It Safe Paula. Now Play It Safe Paula is one of those people who decided that, this whole stock market thing is pretty much a scam. It's really kind of meant for the elites to take all the money. It's pretty much a lose game. You might as well go to Vegas and just throw all your money away. There's no trust in it, and they're very worried about losing money. And so Play It Safe Paula decides that instead of investing her money, she's just going to be really smart. She's going to keep all of her money in a high yield savings account and just save and save and save. Never invest because she knows, well, hey, at least I know I can't lose money when I do this. Well, at the end of 41 years, Play It Safe Paula has about $332,000 in her account, which is much lower than all of her other friends. So as you can see through the study, it's not so much about timing the market as it is time in the market. And one of the reasons why Steady Sarah was the one that was able to create the greatest amount of wealth is because instead of having long periods and gaps of trying to save money and picking the best time to invest, she just simply got started right away and just kept investing and let the power of compound interest work in her favor. So the next question becomes, well, how much money do I need to have invested so that I can retire off my investment portfolio? Well, the best way of calculating this is simply taking your annual expense and multiplying it by 25, and then taking that amount and investing it at a 4% rate. So what do I mean by that? Okay, so let's say that it costs you $20,000 a year to pay for all your bills and to live the way that you do currently. Well, if you take that $20,000, you multiply by 25 years, that leaves you with $500,000. And then you'd simply take that $500,000 and invest it at 4%, because 4% of $500,000 is $20,000. This way that you are guaranteed that you will never run out of money over the course of your life, and that you can actually retire and simply live off your investments. Now, the rate at which you save this $500,000 really just depends on how quickly you want to retire and also how much you like your job. Now, at an absolute minimum, I would say regardless of whether you like your job or not, you should be saving at least 20%, upwards of 40%. Now, I've had a lot of videos on my channel in the past where I talk about budgeting. I'll leave a link in the description box below to one of those videos. Usually, I like to follow the 50-10-40 plan for retiring very fast, which means 50% on your needs, 10% on your wants, 40% in savings. But when it comes to my own personal journey, I have saved usually a minimum of 40% all the way up to 70 and 80% of my income at times. And that's because I very, very quickly wanted to get to financial freedom as fast as possible. But anyways, I hope this gave you some great insight into how to begin timing the market, whether timing the market really does work. But this is a lot of great information. If you haven't done so already, be sure to smash that like button for me. Go ahead and hit the subscribe button. Leave a comment. How much do you save? How much is your planned target for retirement? I want to hear your thoughts below in the comments. Anytime that you comment, you like a video, you subscribe, it pushes the YouTube algorithm out there to really help spread the video out more to other people. So it'd be greatly appreciated if you did so. But let's get out there and let's build that dream.